Okay guys, I'm going to show you guys today how the market looks like normally and where you should be entering from if you're looking for buyers or um, downtrend or either uptrend. The market normally moves like this. So obviously that shows you is an uptrend down. The market is obviously going up. But if you're looking for a bearish and you want this market to come back down and then you need to find out where you can enter from, you need this to come back down and break here, go back in, take the liquidity as well, which is like the fair value gap. There must be fair value gap around that area now. In that area now where the market, when it came back down and broke the sell side liquidity here, it created obviously a strong bush there. I mean a strong bull there. So that area now is where you will have a fair value gap where you need to go, the market need to go back in for your entry, and then guess where you're going to aim to sell side liquidity to continue going down. So that's what normally the market does if you're obviously looking for entry. So your entry should be somewhere around here in this area. So now you'd be like, okay, I want the market to come back in here, make my TP 1 to 2, and say make my stop loss the last buy side liquidity. And that's exactly how you should be getting in the trade. Before you take your entry, you make sure you weigh liquidity sweeps before you start looking for entry positions. So now I'm going to go to the normal chart on the normal candle charts, just to show you guys how I analyze my trade today. So obviously this is a monthly time frame. What you need to do, obviously the monthly time frame is telling you a bullish that the market was going all these months for bullish momentum. So now what you need to do now is you go to weekly time frame. When you go to weekly time frame, you see if there's any fair value gap that you need the market to come back into it. So it looks like it fill in most of spaces or fair value gaps that you was expecting the market to come back in before you start going more bullish. So now what you need to do, then you go to a daily time frame. Actually, no, before you go to daily time frame, you look at any liquidity, buy side liquidity that the market need to taken out. So there's a one there on a weekly time frame. So now what you need to do then, once you find out the liquidity that the market needs to be sweeping, or the market might go back to it because the monthly was telling you this market was bullish and you got a buy side liquidity on that side, then what you need to do is then go down to daily time frame. When you go to daily time frame, you look for any fair value gap that the market been respecting here. There's a one here. And guys, remember, I'm just looking at overall view, like from monthly, weekly, and daily. But I'm gonna short it down and I'm gonna cut it down and explain it for you guys what you need to analyze on if you're a day trader and not a swinger. So if you're not a swing trader, I'll show you how to analyze it. So bear with me, guys. So now what you need to do now, then you got a fair value gap here. Okay, so you see in that fair value gap we came back into unrespected and start bouncing back out from, and there's another little one here. So obviously you can see it, every daily fair value gap that market was showing you, it respected, it came back and respected. You can see that strong rejection wig, it respected and it continued going up. Also here you can see a fair value gap. But now what we need to do then, we highlight the daily candle, which is the one that I highlighted today, the trade that I took. So this was the Tuesday um, candle. Yeah, so we need to see what's happening on Wednesday. So now, what is this daily candle is telling you? It's telling you bullish. So all you need to look for is bullish um, entries before you start looking for any bearish. Obviously, all the buy side liquidity been taken out. As you can see, it's been taken out here as well. It's been taken out here as well, here as well. So all of this liquidity been taken out. So now there's no more buy side liquidity that this market need to be taken out. But because obviously the market daily candle was telling you it was bullish. So if you're gonna take any trades in the morning, you have to look for any bullish entries before you take any bearish entries. So now what we're looking in here is a daily time frame. I mean a daily time frame, but then also we have a daily fair value gap here now. Okay, so what we need to do then is go to 4 hour time frame, and 4 hour time frame is what we're looking for, a fair value gap. So now that was our daily, and now we have obviously our 4 hour time frame fair value gap. So now as you can see, the way you came back into that 4 hour time frame fair value gap. So what we need to do is then the Asian session is in this area now here. So anyone within the Asian session that wanted to take a trade. So now once you take all the liquidity, you took all the liquidities out. So there's no more liquidity to be taken out. So now this market here, you only need to look for any bearish um, entries before you start taking any bullish. So now we are in 4 hour time frame. Obviously 4 hour time frame is not our entry level, and our 1 hour is not our entry level. The 4 hour and 1 hour time frame, we're only looking for imbalances that the market need to get back to it. So now we go to 1 hour time frame. Once you go to 1 hour time frame, you got to here another little fair value gap that the market need to come back into it. So before all this come back, we need to look for a fair value gap within the Asian session that the market need to come back in before they took the buy side daily buy side liquidity talk out. So when they talk out the daily buy side liquidity, and then now the market now is doing a change of character here, we need to see this area if there's any fair value gap. Now the market need to go back into it before they give us a push down where the daily and I mean the 1 hour and 4 hour and daily fair value gap was showing that the market need to go back into it. So we look at 15-minute time frame, which is our entry normally 15-minute to 5-minute. So this is the Asian rank. So the Asian started here and it was obviously consolidating here a little bit, then boom, start pushing up. So now you see you start pushing down, and this here break the sell side liquidity of the Asian session. And also you can say that change of character as well. Once you see that happen, you know this market now is doing change of character now. It's changing now the way the market was moving. So we only need to look for bearish movement. So in this area now you can see a fair value gap that the market need to come back into it. So I have a fair value gap there that is nice and clean in 15-minute time frame. So you don't normally enter from there. You need to wait until it comes into the discount or the premium, where now you can obviously take a nice and clean trade. So now what you need to do is in this little area as well, there's a little fair value gap that you could catch from this little move as well. But if you want to catch the bigger move, you can also see the 15-minute time frame fair value gap. So if you go to 5-minute time frame here and you go to the Asian rank, what time was this fair value gap? It was 3:35. So we are not awake this time. Whoever is trading London session or the US session. So that move, maybe we missed it, but the Asian session people might have caught that trade, and it broke at 4:30 in the morning. So now there's a buy fair value gap here that somebody normally would say, you know what, I'm going to go in from here for more buyers, but no, we can see that that done already change of character. So you already know this market is going to be more bearish now instead of bullish. So now the market needs to play around here. Obviously, you could enter from certain areas, but you don't want to enter from a shorter time frame. Now look, we need the higher time frame fair value gap to respect it before you start going into 5 minute fair value gap, or 2 minute, 1 minute, because then fair value gap could easily get disrespected. So you need to wait for the higher time frame fair value gap to come back in, which is the 15-minute fair value gap. So here is a 15-minute time frame, and what time is that? 9:15 in the morning. So now there's a London session. As soon as it came back into that fair value gap, you say, look, get me in from that position. As soon it gets back into that discount, where would my stop loss be? Above the buy side liquidity of the Asian session. Say, okay, fair enough. If he takes it here, you need to take the Asian high. Look, it took the Asian low here around 7:15 in the morning. Yeah, so here it took the Asian sell side liquidity. So now the market is coming back up to that 15-minute fair value gap, but we also show that maybe the market also might be taking out the buy side liquidity of the Asian session before you continue going down, because there's no more buy side liquidity in a higher time frame. The market need to go taking out. So we can see now there's a lot of sell side liquidity sitting around here that the market more likely could be taking. Plus, our higher time frame was telling us there's a low the bottom area. There was a fair value gaps that the higher time frame was telling us, like monthly, weekly, daily, 4 hour, 1 hour. So that is the area that the market is going to come back into it, and also taking all the sell side liquidity that just hanging around here. So you enter your position from there, from the discount, and you start aiming 1 to 2. I would say to anyone, don't start aiming more than 1 to 2. I know it's all the way there, is gone to all the way 1 to 3, but I normally say to anyone, if you're new to the trading and you're just getting to know your strategy, for you to get used to it, don't go anything higher than 1 to 2 residual. So now, guys, the trade I took today, and it hit my target around 4 in the afternoon. The trade that I took from what time? 9:15 in the morning. So it was a bit slow, but the market started pushing it down around 3 o'clock in the afternoon. A strong push down, and I continue going down and give me my TP. So that's how you should analyze, guys, your trade. Even though the market was telling you daily bullish, as I explained it to you guys, it's a daily bullish here, you can see. But when the daily bullish is happening now, normally what you look for is more bullish. The market is going to happen more bullish. But then remember, guys, look, the market still respected that bullish and pushed up to take this buy side liquidity of the daily high. But the time the market went up to take the buy side liquidity, it was the Asian session. So whoever was trading London session or US session was not awake. So you need to look for, when the market happens like that and there's no more buy side liquidity to be taken out for any bearish, because there's a fair value gaps here that is, the market need to come back into it on a higher time frame, you see. daily time frame, weekly time frame, daily time frame, fair value gap here. It's a massive one that the market need to come back into. This, the one now it came back into for my target. Still, there's a daily one that the market need to push back down more, and I believe that could happen tomorrow. The market could come all the way to 224.47 area or 48. So this is how you analyze, guys, the trade, and that's how you should look into it before you make mistakes and you start getting into your losses. Make sure if it's the buy and you follow it as a buy, and the daily time frame was telling you it's a buy candle, you look for buy. If you took the buy side liquidity or you took the sell side liquidity, then obviously you need to look for, if you take the sell side liquidity, you need to look for a creating fair value gap to come back in down again to take the buy side liquidity. If it takes the buy side liquidity and there's no more buy side liquidity that the market need to be taken, you need to see if the market does change of character within a fair value gap, that you need to go back into the fair value gap to go back down and fill it in the fair value gap that the market need to come back down to. I hope this helped you guys. See you guys soon, and I'll make more videos like this to make sure you guys understand.